Hello, good day, guys. My name is Nick, technical analyst of SuperForex. Today, we shall be looking at the technical analysis on the currency pair USD CAD. And first, we'll be talking about fundamentals before we move right down ahead to technicals, which is purely what we'll be seeing on the chart. Now, we have seen that USD CAD leaks BOC inflicted losses below the 1.3400 amid softer oil price downbeat for US dollar. USD CAD remains pressured for the third consecutive day at the lowest level in a month, and BOC traces RBA moves to surprise market with 0.25% rate hike to tame inflation woes. Now, WTI crude oil remains depressed on demand supply fears, which ignores US dollar's two-day losing streak. Speed from BOC's Budry, Canada employment data eyed ahead of next week's FOMC. USD CAD fades bounces off an intraday low as it drops to 1.3360 heading into Thursday's European session, after refreshing the monthly bottom at 1.3320 the previous day. Now, in doing so, the loonie pair shares the US dollar weakness while paying little heed to the mildly offered WTI crude oil price, which is Canada's main export earner. And on Wednesday, the Bank of Canada BOC surprised market by announcing 25 basis points increase to increase the benchmark interest rate to 4.75% versus market expectations, supporting no change in the previous rate of 4.50% in its policy statement. And the BOC said that concerns have increased that consumer price index CPI inflation could get stuck materially above the 2% target. And that said, the BOC statement appeared dovish as it removed the April language about how the Canadian Central Bank is prepared to raise further rates if required. Now, elsewhere, WTI crude oil prints mild losses near $72.50, while failing to extend the previous day's corrective bounce. Eyes that the second consecutive weekly losses. In doing so, black gold bears the burden of the market fears of slower economic growth due to hawkish central bank actions. And it should be noted, however, that the US dollar index, DXY, remains pressured despite jittery markets and the latest increase in bets on the Federal Reserve 25 BPS rate hike in July, even as the June Federal Open Market Committee is likely to keep the rates unchanged, of course. Now, against the backdrop, we are seeing S&P futures, Wednesday losses, US 10-year Treasury bond yields grind near 3.79% after rising the most in 5 weeks the previous day. So looking ahead, we are seeing that the comments from Bank of Canada, Deputy Governor Paul Budry, and Canada's monthly jobs report will be the key to watching for clear directions ahead of next week's Fed meeting. Now, what to expect on a technical level? We have gradually seen that a strong sell probably in the books, and respecting the fact that there is a very important candle that had touched at 1.33193, signaling a probable revisiting of the zone. And if we were to make an entry at this point down to that zone, we are looking at about 30 pips from that entry point. And furthermore, we're expecting a much more better stance to this, and most likely sell-off of the market. So if we were to make an entry at this point and looking out for more extension, we're looking at about checking our daily time frame. We're looking at about at 1.322290, which is at about 200 pips on 76 to 200 pips thereabout from that entry point, of course, which is good money. And that's our technical analysis on today's currency pair USD CAD. Now let's move over to the stock markets. Hello, welcome back, guys. And on today's stock market, we'll be having a look at Ford Motor Company. And Ford has revealed that Tuesday, after the Detroit automaker is expanding, issuing a new recall for 125,000 sport utility vehicles and trucks. And the recall specifically targets a range of Escape and Lincoln Pursuit SUVs, as well as Maverick compact pickup trucks, which had been manufactured between the years 2020 and 2023, according to a filing with the National Highway Traffic Safety Administration. Now, the affected vehicles are equipped with 2.5-liter hybrid or plug-in hybrid engines. Ford has furthermore stated that isolated issues in engine manufacturing can lead to a premature engine failure, which in turn may result in the release of engine oil or fuel vapor, posing as an increased risk of fire and potential injury. Ford initially recalled 100,000 Escape, Porsche, and Maverick vehicles in the United States in July 2022, and the recall was initiated following the identification of 23 incidents where fire or smoke occurred after a suspected block or oil pan breach. Now, on Tuesday, Ford has disclosed that they had received reports of at least 3 vehicles experiencing fire, even after receiving the recall fix implemented in 2022. In response, both Ford and National Highway Traffic Safety Administration advised vehicle owners to pack and turn off the engine if they had expected unexpected engine noises, notice a decrease in vehicle power, or observe smoke. Ford has stated that they are currently developing a new fix for this recall, but no specific details regarding the solution has been provided at this time. So we are looking at shares of 0.20% in early trading or on Tuesday, and a possible breakout of a new zone at 14.31. So if we were to make an entry at this point and let our trade run up to 16.57, we are expecting 41 pips from that entry point, of course, which is good money. And further details we can expect from the news. We are seeing that Ford names Wilpo Leesdale as new supply chain officer. Now, a lot of people, a lot of the gains has been on this, or rather, a lot of people have been saying this after it had been announced that the appointment of Leesdale will, as the new chief supply, has been effective since June 12th, and rather will be effective June 12th. And this decision comes as Ford anticipates a challenge in 2023 due to chip shortages. Now, supply chain problems and production instabilities could be curbed following the new administration. Prior to joining Ford, Doe held the position of Executive Vice President of Global Strategic Sourcing at Whirlpool, and also had experience in the Global Purchasing and Supply Chain Organization at General Motors Corporation. Now, Doe comes to Ford at a time when improving quality and reducing costs, including through the supply chain, are high priorities and vital for realizing the full potential of the Ford plan. So expecting that this is going to have us skyrocketing to new zones, looking out for the 16.31, nothing less. And at this point in entry, we are looking at about 30 to 40 pips from that trading point, of course, which is good money. And that's our technical analysis on today's stock market. Ford. I remain your host, Nick. Bye for now.